This week, The Informer introduces a new addition to the team, Mark Wenzel. He's a senior analyst with the Hopkins Group, and Mark is going to join The Informer and provide reports and updates on the equity market and the key events impacting our economy. So welcome to the team, Mark. And for your first off report, you're going to look at BHP's takeover of Oz Minerals and the US and Australian reporting season results and the changing inflation outlook. So let's kick off with BHP's takeover of Oz Minerals and what makes BHP takeover of Oz Minerals so significant.
Yeah, thank you. It's a great pleasure to be here, Michael. So certainly, the BHP takeover, is an all-cash offer for Oz Minerals, which Oz Minerals has a large copper deposit right next door to BHP, and by BHP making an all-cash offer, certainly from my point of view, indicates that the recent fall in the copper price due to concerns about global growth and China, the lockdown in China, BHP is looking right through that and looking at the long-term demand for copper, particularly for electric vehicles and certainly the decarbonisation of the world. And, by BHP making an all-cash offer, it indicates that they see significant long-term value by paying cash rather than, companies can otherwise issue shares in their own businesses, but they value their shares higher than what they value the all-cash offer for Oz Minerals. And also just that ability to combine the three mines, which will be all together and get economies of scale from that takeover of those two mines in the South Australian region.
There's a bit of a short-term dip in copper at the moment. Would that also be some of the strategy behind the all-cash offer to get it done while it's low?
Yeah, look, absolutely, I think so. I mean, again, obviously the market sort of looks through, perhaps the short-term stuff, but, it has fallen 40%. I mean, I think, from a longer-term and a medium-term perspective, everyone can see the demand is going to be there, due to that electrification, obviously with the electric vehicles and certainly from a copper usage point of view, copper is used 4 times more in an electric arrangement under an electric car than in a traditional petrol-powered or diesel-powered car. So the demand for copper is going to rise significantly, and trying to get new supply onto the into the system takes a long time. It takes a long time to identify where is appropriate copper mines and get the ore out of the ground and getting that to market. So absolutely looking right through the short-term, weaknesses, to that long-term growth that's going to be occurring in the copper market.
Right. Now, the US and Australian reporting seasons have followed similar trends. In the US, tech companies outperformed better than expected, while in Australia, groups like realestate.com has also reported well. Why do you think that is?
Well, absolutely. I mean, again, market has fallen really significantly. Certainly, the Nasdaq was down sort of 30% at one stage and has recovered significantly. The thing is that these companies are still attracting customers. They're getting good connection with the consumers and their ability to pass on price rises, obviously as inflation works through. Particularly, I think that the market expectations were that these companies were going to fall significantly on the back of rising interest rate environment, and the earnings that are coming through both in the US and in Australia, certainly doesn't indicate that. Obviously with realestate.com, it's a well-known business here in Australia. Obviously the expectation is that the property sales and property, demand, particularly around the election, as well as, just with the rising interest rate environment is coming down. But what you're seeing with realestate.com is the advertising, prices. They can pass through the higher prices, and people are more willing to pay higher prices to ensure that their properties are the first seen by people when they do their searches on realestate.com. And so the earnings has been maintained. And, as I say, I certainly think, that there's going to be a continuing trend around that, that these technology companies do make a big difference to people's lives, and you're going to see that through the earnings power.
It's good to see some of the doom and gloom predictions proving wrong. Now we've got the banks, and ANZ have made its takeover bid for Suncorp, and it's reported results which show that there's further inflationary pressure in the insurance arm of its operations with AMI and APIA, which it owns. And I gather there's a whole range of reasons why that's happening.
Yes, absolutely. So, again, we've had a really difficult time in the Australian, in particularly in New South Wales and Queensland, I guess, with the floods, and certainly from a Suncorp Metway point of view or Suncorp Bank point of view now, they own AMI Insurance and Australian Pensions Insurance Agency, and certainly, what they're seeing, from a cost pressure and also an inflationary pressure point of view, and obviously the ability for them to pass on premium increases because of the floods that are occurring, and also the obviously the tradies that they need to work on properties as they flood are starting to significantly increase, and certainly they're passing those on to consumers in the form of higher premiums, and certainly the expectation is that that's going to continue, and again perhaps due to long-term past failures, I suppose, by planning authorities and those sort of things, there's a significant number of areas where they probably wouldn't be building cities and homes anymore these days. And, obviously Suncorp Metway as an insurer has been a significant insurer in these areas in Queensland and Northern Territory, New South Wales particularly. And so what that's going to create is obviously further issues, and certainly if you're living in those areas, again the premiums are going to increase because the risks of flooding, potentially due to climate change, is going to start to come through. So certainly they're indicating that there's going to be more increases in premiums, obviously not just in the flood zones, but as well for cars and homes and all those sort of things outside of flood zones as well. So, certainly can expect, further inflationary pressures coming to the consumer.
Well, Westpac and CBA reduced their fixed rates over 5 years. Is this an indication that they forecast inflation to fall back to lower levels and not continue to rise over that 5-year period?
Absolutely. The banks have got massive economists and a massive number of economists and analysts within their bank sort of trying to work out where interest rates are going to go. And they're, obviously trying to do the best things to get the highest profits for their shareholders. And by reducing the fixed rates over the longer term, certainly is an indication that perhaps that they see that inflation's peaking. And you've seen that within the US as well, with the US 10-year government bond rate having peaked at sort of 3.5%, a few months ago, and has dropped back to 2.8%, which again, over a 10-year period sort of indicates that perhaps this spike in inflation with, the bottlenecks due to supply chain issues, obviously the Ukraine putting pressure on petrol prices, which you've seen come down, and again that flows through to the Australian economy as well, and just so those medium to longer term expectations around interest rates coming down, certainly to me indicates that we've certainly seen sort of that peak fear in inflation at this stage. I mean, again, obviously things can change pretty quickly if other conflicts break out or supply chain issues happen again. But I think from a medium term perspective, there looks like there's some rate relief in terms for mortgage holders coming through the system, due because of the lower inflation rate. And Michael, obviously with with these things, it takes a little bit of time for behaviour change to occur. As I say to people, if the iceberg lettuce is costing $15, you probably go and buy the spinach for $5 instead, and that sort of change starts to occur, and that sort of change starts to flow through to the system. And certainly from my point of view, and obviously the banks are indicating that perhaps this behaviour change is starting to occur, and that inflation is going to drop back from its highs, and obviously hopefully come off the front page of the paper, and we can sort of get on with the other parts of our lives.
Great. Well, Mark, I can safely say out of all the supply side problems that are being inflicted on the world, I'm not contributing to lettuce whatsoever. So, Mark, Wenzel from the Hopkins Group, first report done and dusted. Look forward to seeing you regularly on The Informer to keep us on top of everything financial.
Great to be here, Michael. Thank you.
Thanks, Mark.